Hello friends, welcome to Finance MCQ. I am CA Pritam Sangwan and today we will discuss about Revenue Recognition AS9, which is a part of Commerce and Accountancy subject of Paper 2, which is a technical syllabus of your SEBI Grade A exam journal stream. Friends, this technical syllabus is of 100 marks in phase 1 and it has 2/3 weightage in phase 2 of your SEBI Grade A exam. And friends, you can find entire technical syllabus of SEBI Grade A exam chapter wise, topic wise on Finance MCQ website in MCQ question format. You can visit the website and practice entire technical syllabus there. I have put the website link in the description box below. So let's begin. Friends, let's start our discussion with first understanding what does Accounting Standard 9 Revenue Recognition covers. Friends, this standard is covered with recognition of revenue which is arised in ordinary course of business activity of an enterprise from first one, sale of goods, then rendering of services, that is if you are giving any services and earning revenue from it, it will be covered under this accounting standard. Then use of other resources of an enterprise which yields interest, royalties and dividend to the firm. That is, if you are earning interest, royalties and dividend, it will come under accounting standard 9. So friends, this standard deals with revenue earned from these three activities only. I hope scope of AS9 is cleared. Now let's move on to the next point. Friends, now let's talk about revenue which are excluded from the scope of AS9. First one is revenue arising from construction contract, because it is specifically deal in AS7 construction contract. Then revenue arising from hire purchase and lease agreements, because lease is covered under AS19 separately, hence not covered here. Then revenue arising from government grants and other similar subsidies, because government grants are covered under accounting standard 12. Then revenue of insurance companies arising from insurance contract will also not be covered under revenue recognition AS9. So friends, do keep these four exceptions in mind. Question may be asked from them. Now let's move on to the next point. Friends, let's discuss now what is a revenue. So friends, it is a gross inflow of cash, receivables and other considerations which will arise in ordinary course of business activity. This inflow of cash from sale of goods, rendering of services and from interest, royalties or dividend. And friend, it is measured by the charges made to the customer or clients for goods supplied and services rendered to them. That is, amount of bill you have raised on your customer for goods or services, and by the charges and rewards arising from use of resources by them. That is, if other person has used your property and resources and you earn from it, then it is a revenue. And friends, in agency relationship, revenue will be the amount of commission and not the gross inflow of cash, receivables or other considerations. That is, for example, if you are selling something on a commission basis and then that 2% or 3% commission will be considered as your revenue and not the entire sales amount. So friends, this is revenue. I hope all these points are cleared. So let's move on to the next point. Friends, now let's talk about methods of accounting in revenue recognition. First, we have completed service contract method. Then we have proportionate completion method. Friends, under completed service method, revenue is recognized in statement of profit and loss account only when rendering of services under a contract is completed or substantially completed. Here the emphasis word is completed or substantially completed, then only it is recognized. Then under proportionate completion method, revenue is recognized in statement of profit and loss account proportionately with the degree of completion of services under a contract. So here the emphasis word is proportionately it is accounted. So I hope these two methods are very simple and easy to remember. Now let's move on to the next point. Friends, now let's talk about how we will recognize revenue in case of sale of goods. When seller has transferred the property in the goods to the buyer for a consideration, or transfer of significant risk and reward of ownership has also been transferred to the buyer. In that case, revenue will be recognized. Friends, also remember that the seller shall retain no effective control of the goods transferred to a degree of usually associated with ownership. That is, if he has control over goods which a owner should have on goods, then it is not a transfer. And friends, there should not be any significant uncertainty exist regarding the amount of the consideration. That is, if amount of consideration on sales price is not clear, then how come we can recognize revenue? So remember these points. So friends, I hope now it is clear when we can recognize revenue in case of sale of goods. Friends, now let's talk about how we will recognize revenue in case of rendering of services. Friends, first method is by proportionate completion method. Friends, this method consists of execution of more than one act. For example, in a lawyer service, he agreed to prepare case documents and also to appear in court. Here there are two acts involved. First one is preparation of case document and then appearing in the court. Under this situation, revenue will be recognized as per the proportionate completion method. In this, friends, it is to be recognized proportionately by reference to the performance of each act. That is, if one act is complete, revenue is to be recognized, and revenue is to be determined on the basis of contract value, associated cost, number of act, or other suitable basis. Then we have completed service method for recognizing revenue. Under this method, only a single act is to be performed in a service. Here, revenue will be recognized when sole or final act take place and service become chargeable. For example, if you have taken a contract of developing a website, it is a single act and you can recognize revenue when the website is completely developed or it is live. Then only you can recognize revenue. So I hope these two methods are clear for recognizing revenue in case of rendering of services. Now let's move on to the next point. Friends, now let's discuss how we will recognize revenue which is yielded from using other resources of the enterprise. The first one is interest. Friend, interest is charged for use of cash resources or any amount due to the enterprise, and interest accrued on time basis determined by the amount outstanding and rate of interest applicable. Then the second item is royalty. Friends, these are charges for use of company's know-how, patent, trademark and copyright. And friends, royalty will be accrued in accordance with the terms of relevant agreement. Then next one is dividend income. Friends, dividend is received as a reward for holding of investment in shares. So if a company has made investment in shares, it will receive dividend on the same. And friends, recognized dividend income only when a right to receive payment is established. Say for example, if company has just proposed dividend but not yet paid, then dividend cannot be recognized in this case. So I hope revenue recognition from all these three type of income is also clear. Now let's move on to the next point. Friends, let's also discuss effect of uncertainties on revenue recognition. If there is an uncertainty regarding collection, revenue recognition is postponed to the extent of uncertainty involved. That is, for example, the uncertainty can be escalation of price, export incentives, then some interest cost, etc. Revenue recognition is postponed to the extent of uncertainty involved, and recognition only when collection is made. Then if uncertainty regarding collection after sales, then make a separate provision to reflect the uncertainties rather than to adjust the amount of revenue originally recorded. For example, if you have recorded rupees 10,000 as a revenue from sales, and if you feel that out of that 2,000 is difficult to recover, then you need to make a provision for rupees 2,000 rather than reversing entire 10,000 and recording 8,000. So just make a provision for 2,000. And then when consideration is not determinable within reasonable limit, the recognition of revenue is postponed. That is, if we can't determine the consideration, then don't recognize the revenue until it is determinable. And then when recognition of revenue is postponed due to effect of uncertainties, it is considered as revenue of the period in which it is properly recognized. That is, friend, for example, if revenue of last year is recognized in this year due to some uncertainties, then it will be considered as a current year revenue and not that of a previous year. So friends, I hope all these points are clear regarding recognition of revenue for any effect of uncertainties. Friends, in today's topic we have discussed what does AS9 covers, that is the scope, then exclusion from scope of AS9, then we talk about methods of accounting, and then we discuss revenue recognition from sale of goods, rendering service, and from other resources, that is interest, royalties and dividend income, etc. And we have also discussed effect of uncertainties on revenue recognition. Friends, I tried to cover all the important points from AS9 revenue recognition which were important and relevant for your SEBI Grade A exam paper 2. Friends, for more practice of this topic in MCQ format, I request you to please visit Finance MCQ website. It has entire SEBI Grade A technical syllabus which is paper 2 of general stream in MCQ format. It has 2000 plus subject wise, topic wise MCQ questions to practice. We have added explanations for correct answers wherever required. It also has 25 test series for your technical syllabus to practice. So friends, there is lot of study materials to practice on Finance MCQ. Do visit the website for more practice and increase your selection chances. Friends, website link is in the description box below. I will come up with new video. Till then, take care and thank you so much for watching.